Howdy traders, welcome to Price Plan Profit. It's Melissa and I'm going to do my trade recap for today, Friday, August 15th, 2025. Today I took it really easy. I basically just day traded, scalped SPX today. Nothing else really set up for me, so I left everything else alone and just allowed myself to focus on SPX for day trades today. So let me talk about my chart. First off, if you happen to catch the YouTube short video that I've been putting out every evening, I'm giving you my SPX buy zones before the market even opens the next day. And today, price definitely came down into this buy zone of 64.53 by 64.35. And it proved to be a place where I was able to scalp some profits on SPX. Now, it doesn't look like big moves or anything like that, but I was up about $500 today, just 3 quick trades on SPX. So now let's talk about the move that I missed. I missed this move right here. The cyan box on the screen is the PMZ, or the pre-market zone. It is an indicator that Trendy John created over a decade ago, and it's my go-to indicator for day trading. Now, I chose not to trade this aggressively today. And when I say aggressively, I mean on the first touch of either the downside or the upside. That is a trigger, long or short. And today's candle came up, touched the PMZ, and that is a trigger short because it's touching the bottom of the PMZ. Now, as I said, I did not take that trade. A couple of days ago, I did take an aggressive trade right at the open, but today we had some areas of support and resistance, and I chose not to trade aggressively right on the opening bell. But if I would have traded this aggressively below the PMZ there, that was good for about 30 points down to my target zone. This gray zone is what I want to focus on. With the weakness this morning, I was watching this zone for a dip buy with confirmation. For me, what that means is I'm looking for higher lows followed by a breakout candle. And my first opportunity would have been right here. We made a low inside of this zone. Had I not been waiting for confirmation and just taken aggressive trade here out of the buy zone, that would have been good almost immediately for about 10 points. So that aggressive entry on the first touch of the buy zone would have paid about 10 points. I did not take the trade. We did make a higher low. This candle did close or did move above the body of that center candle. The problem was this cloud right here represents resistance, and the risk would have been a lower low, and the reward, which is the cloud, it wasn't good enough for me to take this trade. So I stayed out of the trade, sat on my hands. Then I waited and waited and waited until price came back down to the buy zone. Now, again, I'm still looking for higher lows on these 5-minute candles. I got a higher low right here on this candle, and this candle broke out above the body of that center candle. That was the trigger long for me there. My stop was on the trade only 2 points. Now, I didn't have a great risk to reward here, but it was over, or at least a 1-for-1, and I was really targeting this trendy edge that you see on the screen up there, which was 5 to 6 points. So trigger long here on this candle, took some quick profits right away, and then I was break even stopped out on my remaining contract there. So, moving on to the next opportunity that I had to trade from this buy zone, it came down here where we made a higher low, but you can see the breakout candle was right at resistance again, and I did not take this trade here. Going on over right here, I had an opportunity to trade this. I noticed that the Squeeze Pro was looking very bullish here, and I thought, well, if we can break out above after creating a higher low, I'm going to go ahead and go long, right? My stop would have been on this trade about 3 points, and my reward, the trendy edge up here, would have been about 4 points. So I took this trade, trimmed out of one contract there, and then came and trimmed out of the, not trimmed out, rather, I hit this target, and then I put a very tight trailing stop here because I had hit the target that I was looking for the upside. I will usually have a pretty tight trailing stop because I know I can always re-enter the trade again. So right here, then I added a contract right here. I took one off at target. Everything was still looking bullish, so I went ahead and added back a contract here, trimmed again at first target, and then, as I said, trail stopped out there. The final trade I took was actually right in here. I'm going to run some Fibonacci so you can see. What I did is I went short in the golden pocket here. The market just felt weak. It felt heavy. I felt like it could not get and hold above the line in the sand. So I said, all right, here we have highs inside of this 50 and 618 area. If we get a pop back up into this zone, if we make a lower high than on the breakdown candle, I will go short. And that set up right here where I went short. And I was targeting, of course, the zone below again. So that is what I traded today. I've been able to be profitable, day trading SPX, really mainly just scalp trading SPX, if I'm being honest. And it's worked out very well, and I will continue to do that. And be sure and watch for those YouTube shorts of me sharing what my buy zones are on SPX. And of course, they would be buying the dip with confirmation. All right. Until next time, I hope you have a wonderful weekend, and I look forward to seeing you in the next video.